Believe it or not, this week, the fate of the Bitcoin market isn't really being decided on a crypto exchange. Nope, it's being shaped by a bunch of economic reports coming out of the US government. So let's dive in and figure out exactly why every Bitcoin trader is suddenly obsessed with the US jobs market.
So that's the big question, right? I mean, how on earth can something as, well, boring as US jobs data send shockwaves through the entire crypto world? The answer is actually pretty simple, and it all comes down to one single, very powerful institution. And that institution, well, it's the US Federal Reserve. The entire link between jobs and Bitcoin runs straight through the Fed. You gotta understand, they hold all the cards when it comes to the US economy, and every single move they make has this massive ripple effect. At the end of the day, it really boils down to this. All this jobs data is just a clue. It's a clue about what the Fed is going to do next with interest rates. And those decisions are what can either pour gasoline on a Bitcoin rally or stop it dead in its tracks. Okay, so let's walk through this cause and effect chain. First, if the US job market starts to cool off, fewer jobs, slower hiring, the market starts thinking the whole economy is slowing down. That leads to step two. Everyone starts expecting the Fed to cut interest rates to give the economy a boost. When that happens, the US dollar usually gets weaker. And a weaker dollar? That makes alternative assets, like Bitcoin, look way more attractive. See? It's a simple but really powerful chain reaction. This brings us to a super important word you're going to hear all the time: liquidity. The easiest way to think about it is just cash. It's the fuel sloshing around the financial system. When the Fed cuts rates, it's basically opening the taps and adding more fuel. And assets like Bitcoin, which are considered risk-on, they absolutely love it when there's more fuel to go around. A cooling job market is a sign the Fed might be getting ready to do just that. So, here's your game plan for the week. It's a gauntlet of data, really. We kick things off with JOLTS on Tuesday, then we get ADP on Wednesday and Jobless Claims on Thursday, and it all leads up to the main event on Friday, the big monthly employment report. Every single one of these is a piece of the puzzle. Okay, let's talk about Tuesday's report. This one's called JOLTS. And no, it's not about electricity. It stands for Job Openings and Labor Turnover Survey. All you need to know is it tells us how many jobs are currently unfilled across the US. 7.1 million. Remember that number. That's the magic number, the big forecast from economists. Now, since the market already expects this, the real action is going to happen if the actual number comes in way different. And look, this number isn't coming out of nowhere. It fits a pattern we've been watching. Job openings have been dropping for 4 straight months now. So a result of 7.1 million would just be more proof that the labor market is, in fact, continuing to cool off. So for you, reading this is simple. If the number comes in below 7.1 million, that's weak data. It helps that whole cooling story, and that's generally seen as positive or bullish for Bitcoin. But if it comes in above the forecast, that's strong data, which suggests the economy is still running hot, and that's negative or bearish for Bitcoin. All right, let's fast forward to the middle of the week. Wednesday and Thursday give us 2 more really important clues that help us dial in the picture before Friday's big reveal. On Wednesday, we get the ADP report. This one just tracks hiring in the private sector. The forecast is for only 40,000 new jobs, which, would continue that downward trend. And just like with JOLTS, a number that's weaker than the forecast is a sign of a slowing market, which is bullish for Bitcoin. Then on Thursday, we have weekly jobless claims. Now, pay attention here because the logic kind of flips on its head. A higher number here is actually a sign of weakness because it means more people are filing for unemployment. The forecast is 228,000. So if the number comes in higher than that, it's just one more piece of evidence for that cooling narrative, which is, you guessed it, bullish for Bitcoin. And all of that brings us to Friday. This is the big one. This is the Super Bowl of economic data for the week. The official U.S. employment report can literally move markets in seconds. Now, Friday's data is where things get a little weird. It's expected to be a mixed bag. The forecast is for 45,000 new jobs, which is actually more than last month. But at the exact same time, the unemployment rate is supposed to stay flat at 4.3%. So how does that work? So what gives? Well, it's all about how the market reads the tea leaves here. Even with a little bump in hiring, a stable unemployment rate suggests there's still slack in the job market. That just means there might be more people looking for jobs than there are jobs available. So kind of counterintuitively, this weird combo is actually seen as dovish.
It's another sign that still supports the case for future rate cuts.
Okay, I know that was a fire hose of data. We've just torn through 4 different reports. So let's take a breath and pull it all together. What is the one thing you absolutely need to remember from all this?
Here is what it all boils down to. Just watch the forecasts. A cooling job market is good for Bitcoin. Why? Because it raises the odds of a Fed rate cut, which means more liquidity and a weaker dollar. The real story this week isn't just the numbers themselves. It's whether they meet, beat, or miss what everyone's expecting. That surprise factor is what's gonna drive the market. And all of this leaves us with a much bigger question to think about. For an asset that was literally designed to be separate from the traditional financial system, Bitcoin's fate seems incredibly tied to the decisions of central bankers. As this whole market gets more mature, will that connection ever break? It's definitely something to chew on as we watch the numbers roll in this week. Thanks for tuning in.